Hello everybody and welcome to Mortgage Tips on the Rico Wilson YouTube channel. I'm Rico Wilson, your Texas mortgage banker number 42612, and I've got a guest with me today, David Moxham with Juice Real Estate in Austin, Texas. And David's got a question for me and we're going to talk about mortgages for just a minute.
That's right, yeah. So I work with a lot of first-time home buyers, and my question today, Rico, is what is mortgage insurance? When is it required? How much is it? What are the details? Just tell me all about it if you can.
Okay, awesome. First of all, when we talk about mortgage insurance, we are not referring to an insurance policy that you buy from an insurance agent to pay off your mortgage in the event that somebody dies. That's a completely different issue. We're talking about mortgage insurance that is a requirement when you put less than 20% down on a home. Generally, that's the case. And everybody looks at mortgage insurance as a bad thing. Mortgage insurance is actually a very good thing, and here's why. It used to be that if you wanted to buy a house, you had to have 20% down, or you just couldn't get a mortgage. Somebody had a brilliant idea that if somebody were to issue a small insurance policy covering the difference or a certain percentage of that loan amount, that it would be safe to lend people money to buy homes with less than 20% down, sometimes significantly less. So if you want to avoid mortgage insurance, that's a good idea if you can, because it might cost $80, $100, $200 a month. And if you can avoid it, that's nice, because really the only thing it does for the buyer is enable them to get a mortgage with less than 20% down. It really protects the lender against default. So if you have 20% down and you're comfortable putting that down and qualify for a conventional mortgage and you can avoid mortgage insurance, I generally recommend that. If not, you don't have to wait to buy a home until you have 20% down. FHA mortgages go with as little as 3.5% down, and they require something they call MIP, or mortgage insurance premium. Okay. Conventional loans you can get with as little as 3 to 5% down, and they have PMI, or private mortgage insurance. VA has a funding fee. USDA has a small funding fee plus small mortgage insurance. So if you want to put less than 20% down to buy a house, with few exceptions, you're going to pay mortgage insurance. It's not a bad thing. It just is what it is. It enables you to buy a house with less than 20% down, and then you can always refinance it later and get out from under the mortgage insurance. That's the topic of a different video. Any other questions real quick?
Are there any ways, how do they factor how much it is a month? Like what plays into that?
That gets into a calculation that people honestly just don't really need to know about. It depends on the program. It depends on how much coverage is required and the cost of that coverage. And so with FHA, it's pretty cut and dry. Conventional, we have different companies and we can compare prices from those companies to try to get the best rate.
Okay, that's very helpful.
Awesome. So if you need mortgage insurance, that's okay. If you need a mortgage, call me, Rico Wilson, 512-633-7953. David, if they need to find a house and need to call you for some help, how do they reach you?
Absolutely. David Moxham, david@juicehomes.com, 512-632-8228. And we have a brand spanking new office on 2222 Burnet Road. Look for the neon juice sign outside. It's beautiful. Come check us out.
Awesome. Thank you very much to David Moxham with Juice Homes. And I'm Rico Wilson. Thank you for watching. Talk to you later.